Today is Sunday, March 23rd, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and let's get into it. For the events that happened since the last update, on Wednesday we had Jerome Powell's Federal Reserve meeting where he decided that the rates were going to remain unchanged. That's definitely what everyone was expecting. It actually would have been a shock if he said he would have cut rates. He still does see 2 rate cuts at some point over the course of this year. On Thursday, the initial jobless claims came in slightly better than expected at only 223,000 versus the expected 225. And then the existing home sales also came in better at 4.26 million versus the expected 3.95. The initial jobless claims and existing home sales being better than expected is definitely a good sign for the overall economy. And then for the events this week, on Tuesday, we're going to see the consumer confidence report. I do believe that event's going to cause some volatility in the markets. I don't see it coming in at expectation, so I think it's either going to be significantly lower or a lot higher than expected. On Thursday, we have the initial jobless claims and pending home sales. It would definitely be nice for the pending home sales to come in higher than expected to go with the beat that the existing home sales saw last week. And then on Friday, we're going to finish it off with the personal consumption expenditures index, which tracks the inflation associated with the cost of goods and services. So that's the other event that I think mixed with the consumer confidence is going to drive the markets this week. If we take a look at the SPY chart, you'll see that the SPY price closed on Friday right at the 5-day moving average, which both do still sit below the 15. When the SPY price was down here, I talked about how the first sign for a bullish market reversal was when the SPY price finally broke above the 5-day. And since last Friday when it first broke through, it has been able to maintain above it. So it would definitely be a good week if the consumer confidence report that I mentioned earlier came in better than expected, along with the personal consumption expenditures index. That should cause the SPY price to finally be able to get above the 15, which will bring us one step closer to what we're really looking for, which is the SPY price to be above the 5-day and also above the 15. If we take a look at the RSI chart on the bottom, it has gone up a little bit since the last update, but it's still only at 40, and technically 30 or below is considered oversold, and 70 and above is considered overbought. The 50 level in the middle sort of indicates that there's not too much excessive selling or excessive buying. So being at 40 means the markets definitely have some room to go higher without anyone worrying about being overbought. And what I mean by no one worrying about being overbought is it's still an 8.64% gain to get back to the all-time highs. So only a few percentage points gains isn't going to get everyone worked up about valuations like you normally see when the markets are reaching all-time highs. If we take a look at the MACD chart on the bottom of the screen, you'll see that it's just about to cross. I talked about the significance of this in my last update, but pretty much whenever the MACD line finally crosses above the signal line, that's extremely bullish. So as long as nothing crazy happens, we should be able to see that this week. Mixed with the RSI only being at 40 is what's making me optimistic for the markets. So I do think that we should see a pretty good week. These are going to be all 14 of my current positions. Right now, Meta, Nvidia, Microsoft, PayPal, and Costco make up my top 5, which account for 54.21% of my portfolio. Right now, I'm 94.97% invested, which means I only have 5.03% sitting in cash. I do pretty much plan on keeping my portfolio exactly the same this week. Normally, I do like to keep 10% of my portfolio in cash, but for right now, having it only at 5.03 is okay. And I say it's okay for me because the markets just had a major downturn, and there's a lot of stuff that I'm seeing that leads me to believe that the markets are going to move higher, and I want to make sure that I get as much gains as possible, which is why I'm going to leave it the same. There are a few positions that I'm looking at that essentially I could swap. For example, I could sell at a Walmart completely and use all that money to open up an entirely new position. But at the beginning of the year, when we had that big bull run, all of these stocks performed very well, which gives me confidence to keep holding them, and they should do the same again. One thing I do plan on changing once the markets recover is how much of my portfolio is weighted in my top 5 positions. Like I mentioned earlier, right now it's above 54%. Usually I like to keep it between 40 and 45. So right now with Nvidia, Microsoft, and PayPal all pretty deep in the red. I don't want to make those trims now because I do think the markets are going to recover, but perhaps once those positions turn positive, I'll look into trimming them and increasing some of my smaller ones. Since Wednesday, Pershing had a gain of 2.39%. My portfolio had a gain of 2.85%, and the S&P 500 saw a gain of 0.91, which brings us year to date. Right now, Pershing is at a gain of 1.11. My portfolio is at a loss of 0.89, and the S&P 500 is at a loss of 3.42. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.